I'm JC with FX Insights at CIS Trading, the author and instructor for Pro Trading, the creator and developer of TradingView Toolkit and Thinkorswim Toolkit, introducing the Pro Trading chart analysis and trade execution method. A lot of this information comes from the Pro Trading seminars that I instruct. But what I'm not going to do in this video, reviewing the Pro Trading method and the chart analysis technique, is I'm not going to go into all of the details of what all the Pro Trading principles, all of those methods are. I'm simply going to introduce how to set up your charts based on the key levels and the areas, and what that actually means as far as entering and exiting trades. First, CIS Trading has a solutions toolbox that includes TradingView Toolkit 2019, just introduced this year, CIS.CCT series, the Corum Capitalism Theorem series, which introduces the capital performance indicator that you see at the bottom of this chart that deals with yield spreads and the cost of capital, as well as the Stoxometer, Indexometer, Forexometer, and Doxometer. And then there's also the Thinkorswim Toolkit 2012 and the Great Gatsby Pro Trader 2009 resources, which are the impetus for CIS Trading and the Pro Trading methodology. You can go to YouTube, Twitter, Facebook, Instagram, Pinterest, LinkedIn, and I also have a Dropbox free file share to look up more information about myself, Joshua Corum, or any of the hashtags that you see here on this particular video. To begin with, it would be helpful to go to cisevents.wordpress.com, and there you can see a lot of these resources, links to all of my social media right away, and a lot of different videos that go over a lot of the resources, tools available from myself, Joshua Corum, and CIS Trading. When we look at Pro Trading is a very special methodology where I've taken a long history of technical analysis methods, a long history of chart analysis methods, and a long history of indicator performance, and condensed it to a complete chart analysis method. What I'm presenting are some of the best trading solutions, the #1 chart analysis method, the best capital management focused trading methodology, and the #1 time management strategy for entering and exiting trades. The purpose for Pro Trading was to examine all of the typical problems with traditional levels, traditional indicators, traditional chart analysis methods, and traditional technical analysis, where each of those at some point are presented with some anomaly of failure. In so doing this, what I've created is the #1 decisive discipline for entering and exiting trades. When we set up our Pro Trading charts, those Pro Trading charts take about 10 minutes per instrument in time at work. Typically, I'm working with no less than 12 foreign exchange pairs, so it takes about 2 hours to set those up. What I recommend in Pro Trading is to trade in 4-hour sessions, and then after that 4-hour session, go back inside your 4 hours, update all of your key Pro Trading levels, and then go to your daily, weekly, monthly very quickly and make sure that there's not any significant change to the Pro Trading technical levels and areas. When Pro Trading, we're focusing on the potential range of trading levels and areas from the Pro Trading principles. We're looking at color scheme price action levels where there's going to be price action, key market making areas and levels where we either hit targets, achieve targets, or find an area where there's obvious market making. And I'll show you how to identify a little bit of that as we go through these charts. It is a real trade management system. And the goal and the purpose for pro trading is no exit without capital gains. So what I've achieved is a methodology for trading where it's entirely capital management based on an entirely new method of technical analysis where there is never an exit without capital gains. And that's what we really want to achieve when we're trading, is to be able to manage capital in a way where we never have an exit without capital gains. So I am not discounting technical analysis because I'm a chart technician. I'm not discounting indicator systems because I believe in indicators and I'm an indicator creator and developer. I'm not discounting any resource or any knowledge when it comes to candlestick patterns, Fibonacci levels, Smith numbers, traditional number levels. I'm not discounting any of that knowledge, but what I am doing is identifying that in each category of trading ability, skill, and knowledge, ultimately, historically, there is a failure in any one of those particular categories. And what I've tried to do with pro trading is create an entire methodology where there isn't failure, where you don't have a false pattern, where you don't have a false signal, where you can simply look at the chart, identify all of the key levels, and be able to read and understand that chart simply through chart analysis, and be able to manage positioning without any loss. So when we're looking at pro trading and setting up our pro trading charts, although I'm not going to go into all of those principles and methods from my pro trading seminar, we are going to identify the bearish levels and areas, which are identified in blue, the bullish levels and areas, which are identified in green, the market making and target levels and areas, which are identified in orange, and on occasion there will be consolidation zones, which are created by a certain technical array where we have a consolidation zone where if price gets to that point, it will simply consolidate and potentially reverse. All right? So I'm going to begin with the US dollar Chinese yuan. And I've already set this chart up completely for pro trading. So when I begin, we're just going to look at a chart I've already set up. I'm going to sort of go over exactly what we're looking at, what we're identifying. And then we're going to go through the Great British Pound Australian dollar. And I'm just going to walk through my typical time at work for my pro trading setup. It takes about 10 minutes, and go through that Great British Pound Australian dollar chart and set it up completely. Now, I'm going to say this, and when I do, I'm not trying to offend anybody. I'm not trying to discount anyone else, and I'm not trying to discount technical analysis. But I have done something not only in research, in work, and in trading, but also in my development of my trading systems for TradingView Toolkit and Thinkorswim Toolkit to really prove that at a certain point, technical analysis is an anomaly, that the traditional technical methodologies aren't really true, that there is a certain capital performance that determines what really happens relative to price and relative to trading exchange in the markets. And so at a certain point, there are technical errors or anomalies where technical analysis fails. What I do with pro trading is something to eliminate that entirely. So I don't want to discount anything that is helpful or beneficial as far as knowledge. But I have done something in research and in practice with pro trading that not only simplifies and condenses all of that information, but expands its usability to the point of principally not any error at all. meaning not any capital loss. So let's get started. We're going to look at the US dollar Chinese yuan. All right, so when we look at the US dollar Chinese yuan, I have this set up on a daily chart. You can look at this chart. You can see I have the CIS CCT, the Corum Capitalism Theorem Capital Performance Indicator at the bottom, which deals with yield spreads and the cost of capital. And what we're looking at there is simply a way to identify how a particular instrument is performing, whether it's a buy or sell, relative to the capital structures which are in place. All right, that's all that indicator is really for, but it is a best-in-industry indicator as far as looking at the current capital structure relative to every $10,000 of capital in foreign exchange and being able to see how price and that particular instrument are performing and what the particular signals are relative to the cost of capital, the yield spread, the bond performance, and the yield performance. When we look at our main chart, we have orange levels and areas, which are market making and target areas. We have bearish target areas for price action, which are bearish reversal and breakout levels and areas identified in blue. We have bullish areas in green, which identify the key bullish reversal and breakout levels and areas. All right. On this US dollar Chinese yuan, I do not have any consolidation areas that I have identified yet. All right. So I didn't put any of those on there yet. But what we're looking at is when price goes to a key market making level or target area, we're looking at what the overall conditions are, because typically at those levels is where we are going to find market-making activity. We're not going to find price action. We're going to find market-making activity. In other words, a place where price stops, where capital performance changes. When we look at bullish and bearish areas and levels, we're looking at areas where we should see price action within those areas. Even in a bullish reversal and breakout level or area like a green box shown in the middle of this chart, it doesn't mean that all the price action is going to be bullish. It's saying that's a bullish target area, and when price gets there, all of the price activity should be price action. If we were to get into that area and then start to see a lot of market-making activity, and I'll show you how to identify that market-making activity, if we were to get in there and see that activity, we would want to go through and reconstruct our pro-trading chart with key levels to identify those market-making levels. But typically, when we go into a bullish-bearish level or zone or area, we should see price action. Even if it's price down in a bearish area and then price moving right back up, some of the methods for pro trading and the principles identify 2 to 4 different candles as one candle moves, so that we're able to interpret real price activity across multiple time frames very quickly and easily. But when we get into these zones and at these levels, we should see price at market making and target areas stop and capital performance change. When we get into the bullish and bearish zones, we should see a lot of price action activity where we get a lot of capital performance. And those are typically the areas where we want to be in a trade before it gets there and get into that move and then trade some of the price action if it reverses in that area or begins to consolidate and break out again. So US dollar Chinese yuan, this is the daily. You can see the orange areas, the orange levels, the blue areas and the blue levels, the green areas and the green levels. I'm going to go all the way to my monthly chart and show you what it looks like on the monthly. I'm going to delete my identifiers here, my labels, so you can kind of get a clear idea of what we're looking at on this particular trade. So US dollar Chinese yuan, when we're looking at our pro trading setup, you can see in the lower portion of the chart, there's sort of a lot of space between some of those levels. And on this last up move, you can see a variety of market making levels and price action levels. One thing that's very key in the pro trading method is when you look at the right-hand side, where you see these price labels, they are identified to the color scheme, whether they're market-making, bullish, or bearish levels. So as we go into our lower time frames, when we come to price action or price activity at those levels, we're going to know what to expect. Because what has happened technically at those levels previously has either been market-making activity or price action, bullish or bearish. So we're going to kind of know what to expect. Initially, when you look at this monthly, you can see in the higher regions, it's a lot of market-making activity and mostly bearish. And then in the lower region of this candle, toward the middle, that's where you had your last bullish price action levels, which is typical, where you have a core value, but that's where below that area is where you're going to have most of your bullish sentiment, and above that area would be where more of your bearish sentiment would be. And you can see that reflected in the pro trading levels. So let's go back through this very quickly on a weekly. So we're looking at the weekly chart. You can see on the weekly, we moved above and set up a key market making area between two bearish pro trading levels, and then began to move higher up into a market-making area where we should start to see capital performance see some pressure. In other words, these orange levels typically signal that price really won't move through this area. That once it gets there, we're going to see some capital performance pressure. Even if it was to go down into this bearish area, to this orange box where we have this market-making area marked here. When price gets there, typically it won't move through those market-making areas. It will sort of stop, and you'll see some capital performance sort of change in that particular instrument. So very quickly, the daily chart. And you can see we had a bullish area that came up on this consolidation at this swing low and had a diamond reversal here at the bottom, and it sort of set up. And when it came into this market-making area here, that's where we saw our bounce into our bullish zone, and you can see the price action up through that initial bullish zone. All right. I had a huge green bullish box above this area and a sell box where we're at as far as a bearish condition, but I've since removed that based on the new pro trading chart. So if you've seen one of my previous analysis on the US dollar Chinese yuan when you're watching this video, it will show that there was a short play on this trade a couple of weeks ago, and that's since passed. So I've removed all of the pro trading signals for that. So look at the 4-hour chart. Let's take a look at this 4-hour chart. So when we get into this 4-hour chart, you start to get into a lot of the internal price action and where we are relative to these levels. So toward the bottom of this last up move on this 4-hour, you can see we have some tight market making and price action pro trading levels marked there, and toward the top we have the same kind of condition. Toward the middle, there's some space there for price action. So let's go in here and take a look at what this looks like on the 1-hour chart. So when we look at the 1-hour chart, I have some bearish conditions marked on the lower part of this, on the 1-hour. So when you look at this 1-hour, you can see where we had a consolidation of pro trading levels that were bullish down below the lows on this 1-hour chart. And as we moved up, we set up some bearish conditions. We had some bearish patterns that began to set up and some bearish price action and market making that began to provide some bearish signals as we moved higher. And up here at the top, you can see where we've entered into a market making area where we have a lot of pro trading levels in there. So let's go to our 15-minute and take a look at what we look like on the 15-minute. So here we are on the 15-minute chart, and you can see where we are at our key market making level at the high, right into this orange market making area. And right when we got there, we started to see some capital performance pressure. Our next level down, of course, is the 712.55. And both of those are market-making areas. So what we're looking at is what happens as far as price performance when we get there. And we know where we're at in our trade, that we're up against this market making area, and that typically is going to put some pressure on price performance. So in this area, what we're looking for are any signs of some bearish signals to begin possibly selling the US dollar Chinese yuan, because our last bullish conditions all the way down at 712 on this 15 minute, and we're trading way up here at this 713 area. All right, so let's go into our 5-minute chart and take a look at our 5-minute chart. Now in our 5-minute chart, you can see we have a lot going on inside this 5-minute, and what that's telling us is we're definitely in a market making area. We're seeing some pressure on capital performance, and decision making is going to actually be on the 1-minute chart and the main daily signals for our TradingView toolkit. All right, so we're looking at this 5-minute chart, and you can see at the top we have a market making area and a sell signal. We have a selling level, a bearish level, pro trading level down below this range that we've been in. And although we have a little bit of bullish activity within this range, most of the pressure in here you can see is orange and blue. In other words, we have some market making activity in there that just offer a little bit of some bullish conditions, but most of that price action in there is market making where we have some bearish conditions present. All right, so when we go in and we look at our 1-minute chart, you can see where we've traded in this 1-minute chart, and I'll zoom it out a little bit so that you can see sort of what that price action really looked like on this 1 minute. As we moved up, you can see how we come back and consolidate at these key levels for pro trading. We get up into that zone, we see some pressure, and then we've come in here and we've consolidated on this 1 minute. So when I zoom this in and I look at where we're at on this trade as far as 1 minute entry exit, all right, and trading in this sort of market making consolidation, we have a market making level down here at the 713.14 area, and then we're up here at 713 into 713.65 into the 713.7 region, where we have that market making area to put some capital performance pressure on this. And you can see we have a market making area at the 713.55 that was set up here. And as the price began to move up, we start to see that selling pressure. And so here we are on our 1 minute, and the way we look at this is what is the condition when price gets to that pro trading level initially. In other words, if we're long down here at 713.34 and price moves up here to the 713.47, which isn't really quite enough in the spread to really cover sometimes with this Chinese yuan trade. But if we're in this trade long, when we get up to this level, if capital performance begins to reverse or see some pressure, or price stops at that 713.47 level, it's telling us that that's a selling level, that the last time that price was there, the technical conditions were bearish. And so that's what we're looking at currently on that trade. So you can see how when you go into your 1 minute time frame, after setting up your pro trading charts, and you're looking at your shorter time frames, 1 minute, 5 minute, hour, 4 hour, to begin to look for trade entry, to position yourself in the market, you have everything that you need as far as what the technical conditions are, buy, sell, and where you are relative to market making activity. And what we're looking at here is, if we go back to this 1 hour, is that most of our price action on this trade for the US dollar Chinese yuan is going to be in the space below this market making area at the top and down below this initial consolidation. So our initial trade plan would be to be short this position down through some of these price action areas. When we look at this trade at a 4 hour interval, so we're looking at sort of a multi-day trade. When you're looking at a week-long trade for the Chinese yuan against this US dollar, what you're looking at are 4 hour charts. If you were looking at a couple of weeks trading, that's where you're looking at daily candles. So looking at the coming week, we look at this 4 hour, we see a lot of price action opportunity on the low end and nothing but market making in the region where we're at. So most of our trade entry here, predominantly, we would look at being short initially and just sort of follow the pro trading principles and methods within our pro trading chart down toward these lower levels, even potentially all the way back down to this 703, 704 area on this US dollar Chinese yuan. So that's what it looks like when we're looking at a complete chart set up already with the pro trading method. All right, with the pro trading technical analysis. Now what I'm going to do is I'm going to pull up the Great British Pound Australian dollar, and I'm going to spend roughly about 10 minutes on this trade. And I'm going to look at just our pro trading levels, and I'm going to identify those based on the color scheme condition. All right, so to start off with, on the monthly chart for the Great British Pound Australian dollar in focus, so we're looking at pound out trade here. At the very top, we've got a market making area. All right, so I'm going to identify that, and that market making area is orange, so I'm going to make that orange. Very simple. There's no price action there. That's a market making area, and we saw a reversal there, and so I'm going to identify that orange. Very simple. We have another market making area on a swing high. I'm going to identify that orange also. We have another cluster of market making areas, and I'm going to go ahead and identify that because that's sort of a top tail doji pin bar there, and that market making area is going to be key at a certain time again. Now these levels on this monthly are way above 200, so we'll probably never deal with those at least in the near term. There won't be any situation where we'd possibly be dealing with those, but I'm marking them anyway, so they're there for us. We have a key market making area right here on this top tail doji, and that's really what that is. Don't call that a pin bar, please. It really is a top tail doji. We have a key market making area there. There's a reason for that. At this top, we have a bearish arrowhead type of price action inside this, and that also identifies a spirit pattern from our pro trading method. And so I'm going to identify those levels as bearish on this monthly, where we came up into this high. When we came down, we came right back up into this market making area, and we've seen a reversal there. So I'm going to sort of mark those key pro trading areas based on that condition. We look at this monthly, down at the bottom we have a market making area there that's orange. So I'll mark that orange. And I'm going through this just a little slower than I normally do, just so you can get an idea as to how to set it up and follow along a little bit if you're looking at a chart there. I have a bullish reversal condition at this bottom that I'm going to mark those levels green, because those levels are bullish where they are. And that's a diamond reversal right there at that bottom. And we kind of chopped around a little bit, moved higher. I don't see anything as of yet on this monthly. I do have one key market making area here that I need to mark orange right here. I can zoom this out a little bit. This, I'm going to mark the core area . I'm going to mark the core area on this reversal right here at this bottom on this monthly. And that's going to be bullish. We had a bullish breakout there on that 2-bar, and that's a break above the core, so that's a bullish price activity there. And then I'm also going to mark the market making area in the wick of these two candles right here, about halfway through, just like it was a core value, and that'll be orange. And looking back through this monthly, I really don't see anything else except for two bearish conditions. We've got a core level right here around the 196 area, a little bit above there. That's bearish. That's where it broke the core of this previous candle. And I'm just going to look at the body on that. I'm not going to count that wick because I have that market making area marked there. So you could go halfway through that candle, but then we're also going to have another core break. I'm going to mark this area as bearish halfway through this big bearish candle. Something had to happen once price got down toward that core area to cause it to move double that length. So I'm going to mark that as bearish too. So you can see where we're at on this monthly. Now, when we look at this monthly chart, Great British Pound, Australian dollar, we are trading in consolidation inside of two bearish signals based on our pro trading level. So that's something to keep in mind. The two areas above us on this Great British Pound are also bearish. So you can see that these levels, as we move up long term, there's been more recent bearish activity there. Let's go to this weekly. Take a look at what we look like on this weekly chart. Would I identify anything that I see there? I have a key market making area right here at this initial bottom. That's going to be orange. Key market making area, we just broke above that, but I'm going to mark that there on the weekly. That's also orange. I have a key market making area toward the top, so I'll mark that level. On this tiny pin top tail, I'm going to mark that one. I don't see any significant pro trading reversals here, except for I will mark this diamond pattern all the way back to here. That's a diamond reversal on the bottom on that weekly. So I'll mark both the high and the low green. Understand that? On those patterns, I'm marking both the high and the low green. I have one bearish signal on an arrowhead halfway through. On these longer term charts, I don't go too far in them, but I like to look at least the last two moves, up and down. So I want to get one move up and one move down on my longer term time frames. I don't need to go all the way back historically, except just to kind of check out where the major highs and lows are. But I want to definitely look at the last up move, last down move on that chart. Let me mark the top of this area. Go into the daily chart. Take a look at the daily. A lot of market making on this daily chart. So I'm going to mark that area right down here at the bottom, and we're going to have another one up here at the top. And I've had a lot of analysis on this Great British Pound Australian dollar. I trade it quite frequently in my trading. You can look at the results there in my account. I do have a long call on this, but we do have one issue we're going to have to deal with over time, and that is we have a bearish reversal short on a diamond pattern as this moved up. You can see this inside bar, outside bar, inside bar. I already have the top of that marked with a previous bearish level, so that might be what caused that. We went into that bearish pro trading level and had some consolidation and created a diamond short down below this 178 level again, which is very disappointing to me. Very disappointing to have to deal with that area ever again. So let's look at this. So we have a market making area right here around where we've been trading. I'm going to go halfway through that low pin there, and that would be an orange level. And I'm going to mark a bullish level halfway through this very large bullish bar on this daily. so that we know that at that core value, when we got there at that core value, that something happened that really moved price higher that had to be very bullish in that trade. And that's key price action activity. So I'm going to mark that with a level there. I have on the daily chart, I'm not going to go back too far into it, but we are approaching a key market making level. On that chart, another one right here at these highs. I'm going to go ahead and mark it. I'm looking to see if there's anything significant. We had a bearish diamond reversal as price moved up. You can see in this area that I'm looking at back in June of this year, on this daily, we had a bearish setup with a bearish diamond reversal pattern, and price moved higher before it broke back down below. All right, that happens sometimes, but those diamond patterns do play out. That has to do with capital performance. There's something going on there. All right, when you see those, for example, when you look at this and you see that diamond pattern and then price moved against it, one thing that you can do is once price comes back down and break below it, and this is for certain, is you can take sort of a gray, we're going to use a gray area, all right, and you can identify that for the length of that time. So when I look at where that diamond is, and I just kind of roughly with my eyes determine that's about the length of that time, I'm going to mark that area just like this. Once it broke down below it, I'm going to mark that consolidation area there, and that consolidation area will be gray. All right, so I'm going to go down to my price action zones, black and white, and I'm going to mark that gray area. What that means is if price tries to come back in there, we're probably going to see a reversal back lower because of that pressure from that diamond pattern. When price moved against it and then broke back down below it, that's a technical condition that's true, and that signals that for that same length of time, we shouldn't see anything technically above that area, is what that really says. I'm not going to mark anything else on this daily. I have one more market making area here. I'll mark it. But that should be sufficient for this trade, because once we get in on this Australian dollar against this British pound, and we look at some of this price action, there's going to be quite a bit. So here we are at a 4-hour. And it's taken me a little longer than 10 minutes, but I want to really go over this enough so that you can kind of get an idea as to how to really set it up for yourself. We have a couple of bullish conditions down here at the bottom. This is an arrowhead pattern right here. That's green. And we had another arrowhead, one inside another, significantly bullish, so I'm going to mark that. I don't see anything else significant. Have one key market making area there at this top on this wick. And those market making areas are important. What that means is when price got to that level, something had to happen to reverse price. It wasn't price action. In other words, there had to be market making in that area to get it off of a bullish high and back down below toward the core value. I have another key market making level here, back a little ways. And I'm just going to mark it because it's so obvious with that really long tail. Looking at the recent price activity, the only thing that I really see here is a bearish inside bar. So I'm going to mark that bearish inside bar on my short-term time frames. All right. So that's a bearish inside bar. We broke down, came to a market making area, and then saw a bullish reversal through this core area. So I'm going to mark that bullish, and that's a green pro trading level. And I'm going to mark this right here is an all for one pattern. Where we have this reversal upward, it's an all for one pattern. So I'm going to mark that bullish from the high of that last candle where that one candle struck all that out. A lot of people call that like a bullish engulfing candle. That's the traditional way of identifying that. But in the pro trading method, I use a 2, 3, 4 method, and it's very important to understand that as an all for one, because what we're looking at is that is actually a bottom tail doji, an inside bottom tail doji to that trend when you count it all together. So that's why I call it an all for one pattern. All right, let's take a look at our 1 hour, see what our 1 hour looks like. So looking at this 1 hour, I have a key market making level on this little pin, this inside pin, on this high pin. I'm going to have one more market making area on this bullish piercing low. Another market making area at this high. And I'm going to identify this diamond pattern at the top of this last swing high as a bearish diamond pattern. We've already broken down below it, but I want that level in my chart. It's very important. We had a bearish inside bar break on this inside bar where we broke down on this bottom tail, and I'm going to mark that. So when we go down lower, I'm looking for anything significant. I have a bullish core break on this top tail low pin candle here, so I'm going to mark that. Looked like it could possibly be a spirit pattern, but once it breaks that core and then goes up through that high, which is really tricky with those, but my guess is something might have happened here that created that bullish condition. And when we get inside our 1 minute, we'll find it. But there's a chance that this was the setup of a spirit pattern that never really set up. Like we have the spirit pattern up here at the top with the diamond top. And what I'm looking for is anything alternative to the trend initially. If there's any bearish signals as this moved up on this 1 minute, I really don't. I just have one key market making level on this 1 hour. Let me mark it. Go into our 15 minute. And all I'm looking for here on my 15 minute, I'm not going to mark everything on my 15 minute. What I typically do is I go through and I look for anything that is a pro trading pattern. And I do. I have a bearish. I'm going to mark this bearish, a bearish diamond pattern right here at this top. So we moved up to a new high. We started to consolidate, and we had a diamond right there. I don't really consider this a down move, even though it made a lower low than the previous two candles, because it's still right at the top of the trend. So that's still a diamond top to me. The high's above the core of this tiny little low pin, so that's still going to be bearish to me. And I have another bearish pattern on this 15 minute down toward the bottom. Now here's something very important. As price began to move higher on this 15 minute chart, above 180, we had a diamond pattern on this 15 minute that showed trading below the 180.60 region, down below 180.57, and it never moved lower. So that's going to put some pressure on this trade. We're going to find it out too. British pound, Australian dollar. So remember that key area. I want to make sure that's marked. When price gets down toward this area, it's really going to want to move downward. because that is a key technical capital performance short that never came through. And they do. They don't fail. It might take a little bit of time if something else technical happens, but that always will play out. That's a capital performance condition, and we'll see that play out. So we're looking at our 5 minute here. Same thing on my 5 minute. I'm looking for anything that might have been missed between my swing highs and lows as far as key pro trading patterns. Are there any capital performance patterns that did not get made? I'm not going to worry so much about all the key market making levels yet on this. I am going to mark this one though on this long wick. Mark this market making level. On this 5 minute, it looks fairly clean up through here, fairly clean up through here. I'll go ahead and mark this market making level here. Right up to about 50%. Come back. Do I have anything bearish that didn't play out on my candle patterns? I don't see anything initially. It looks like everything looks good. So let's go to our 1 minute and let's look at our 1 minute. And we can see where we are on our 1 minute chart. So looking at this 1 minute trade, had a little bit of a whipsaw toward the end of the day, which is typical on a Friday. Sometimes that'll happen. So when we look at our 1 minute, we're looking initially at a range between the 181.78 all the way up to the 182.06 area. And that's what we're looking at on this Great British Pound Australian dollar. So let's go back and look at our daily and get an idea as to what we're looking at going into our day. Okay, when we look at our daily, most of our bullish conditions are below this 180.15. As we got into the higher range, we started to see a lot of market making and a lot of bearish signals inside of our time frames. So what we're initially looking for on this trade is probably a little bit of pressure until we get something inside of our 5 minute or our 1 minute chart that's significantly bullish. One thing to also keep in mind when we look at this daily chart is our price action zones. I'm going to mark on our daily are going to be below this level for the next, all the way down to my first significant bullish area where I have a cluster of bullish levels. I'm going to mark this zone for, let's say, about a week. Just like this. I'm going to mark it for about a week. And I'm going to make sure I go to my template. I have it set up so it should be price action zone bearish. All right. Now, where I have a price action zone where there's a lot of space, I'm going to go outside one day. I'm going to mark inside of that area and say this is a significant target area. All right. And I'm going to keep that bearish. And I'm going to do the same thing on this lower region, below these market making areas into this big space here. I would expect within the week for us to see some price down here. All right. Now, I don't have anything bullish except what would be bullish above this area would be if we got above this market making into this market making zone. So I'm going to mark that, and I'm going to stretch that out, let's say, for a couple of weeks, and there's a reason for that. Just to give this trade some time, I know I have some initial pressure. And you can see here I had a consolidation area, so I had that marked. When I have those consolidation areas, one thing that's going to be significant here is I don't have anything bullish in the upper zone of our current trade. So I'm going to go in here on our daily, and I'm going to start with my current day, and I'm going to go out for the next 3 or 4 days, and I'm going to put a box there, an area marker, and I'm going to make that orange. And I'm going to say that if price hits that area, it's going to reverse back down. We're going to see pressure on capital performance. All right? That's really what I'm going to see. When I look down here at the lows, I'm going to go below this bullish zone. All right? And I'm going to do the same thing. I'm going to put an orange box down below these consolidation levels, and I'm going to run that all the way out to the same 2 weeks of my high target. See how it matches up? That way, when we get this move in price downward into this bearish zone, what I think will happen is price will get into this and we'll have trouble moving through it. And so I'm going to mark the area below it where we see these green levels all the way down to that bearish level, out for 2 weeks. I'm going to match it all up. I'm going to mark that region bullish. All right. I'm going to go to the last 2 weeks of my daily trade. And on just the last few days, I'm going to mark that really bullish. I think that's going to be a real target. All right. Over the next 2.5 weeks. And I'm going to go down to the very bottom. And I'm going to go for this week, and just this week alone. If price reaches this area, it's definite buy reversal. Does that make sense? If we get down to 77, 76, that's going to be a buy reversal. And all I'm doing is using my pro trading conditions based on my levels on my daily chart to set that up. All right? Now, I'm going to very quickly go to my monthly. All right? And I'm going to look at what potential is here on this trade. All right? If we get down below on this monthly, if we get down below 71, watch how simple this is. Even though these are bullish areas, if we get down here between these zones over the next couple of weeks, or over the next few months, if we were to get down in there, those are going to be bearish. In other words, when we get down there, it's going to be a bearish condition, and we're going to see price action. All right? It's going to be a price action area. There's a lot of space there, and it's going to be significantly bearish. But what I don't think is that we're going to see the low end of that, just looking at technicals. When I look at where core values are on this bottom, on this monthly, I'm going to go right in the middle of it, and I'm going to put another bullish, bearish band in there, just below those bullish price action levels for pro trading. And I'm going to say if we hit there, that's going to be some significant price action through that zone. In other words, we're not going to see a lot of consolidation. We're going to see price just move through it, up and down. Make sense? And I'm going to put a bullish target. I'm going to go out from this month, this current month, in this vacuous space above these market making levels where we have some range. I'm going to go out the same distance from 89 all the way up to 202. And I'm going to mark, I'm sorry. Give me just 1 second. Apologize for that. Not quite. I'm going to go above 93. Sorry. I'm going to go above 93, and I'm going to say if price gets up that high, we're going to see some capital performance pressure. It's going to put us in the top end of this market making region on this top tail. And I think that's where we're going to see significant capital performance pressure. And I'm just looking at a monthly chart. All right? And I'm going to say that the region below it above the first sell level, I'm going to say if we get there to 85, we're going to see price action all the way to 92. Does that make sense? When you're looking at this chart? And what I'm going to identify as my target on that monthly is I'm going to put another bullish zone there. And I'm going to pull that bullish zone all the way out to my last swing high right there. And I'm going to do the same thing with my orange box. I'm going to pull it all the way out there. And I see one more thing here as far as technical analysis on our monthly. And again, I apologize for taking a little more time on this analysis, but I really wanted to offer the opportunity to sort of go along and do the same thing as I did it. So I'm trying to be a little bit patient. I'm going to go out for 1 month, 2 months. So I'm going to go out 2 more months from where we're at, 2 more candles. And I'm going to put a gray box there. And I'm going to say that will be a definite consolidation zone. If we end up there, we're not going to stay there. We're going to reverse and come back higher right away. So we're looking at least 3 months out, potentially, to see anything below 171. And over the next couple of months, we see a potential of getting above 85 all the way up to 192. That's what my pro trading analysis tells me. Now, when I go back to my daily and I look at my daily conditions, what is my initial signal? Some pressure above 182.50 and selling down through the 180.50, potentially all the way to 78 again. All right? That's initially what I'm looking at on my daily. Now, I can go into my 5-minute, and I can do the same thing and mark my zones. So I could go in here, and I could say, all right, if we get down in this anytime, over the next few minutes, I could mark this zone, for example, right here, and I could say this area is going to be a bearish zone. We're going to see bearish. It's a bearish target, and we're going to see price action when it gets to that level. Make sense? I can look at where I'm at, and I can see that we're in a price action area. I don't have any key levels other than just this one bar where I've marked this one market making level at the 180, 192. So if we break below that, what am I looking for here? I'm looking for a short initially down to this 180, 190. Make sense on that 5-minute? When you look at the 1 minute, you can do the same thing as you're trading and mark those levels. So when I look at my 5-minute chart, it's telling me I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Give this market 15 minutes, and let's not see if we're heading down here to this 180, 187 area. And that's pro trading. That's the pro trading method. That's how we do our chart analysis in pro trading. There's a whole lot more as far as fine details that we could go into, all right, and really examine the technical conditions. But for basic chart analysis, this is pro trading from CIS Trading. And I'm JC with FX Insights. This is the British pound, Australian dollar. I have the daily up to show our key levels for a short zone from where we're at all the way up to maybe the 183 level. We're looking for a target back down between 180 all the way down to the 178 area again, consolidating, looking at a long-term view, weekly, looking at our weekly chart after this move down initially this week, possibly seeing a move all the way up above this 185 level to the 192 level over the next month plus. So once again, I'm JC with FX Insights. This is CIS Trading, Pro Trading with TradingView Toolkit. I'm going to remove this chart, and we're going to look at what we look like on our TradingView Toolkit very quickly for about 20 seconds. This is TradingView Toolkit. Market depth, pro action at the top. Pro trader buy sell signals with all of your key levels. So I take pro trading, I condense it down to just these key levels, and it keeps track of them for you. So it removes sort of the hard work of pro trading, really. But if you're a technician like myself, pro trading is the best technical methodology for trading, and you'll get addicted to it. But this is Pro Trader, which condenses all of the pro trading into these key levels for momentum, trend, your key high and low targets, and your breakout high and low targets with the Great Gatsby Pro Trader candlestick signal buy-sell condition that colors your candles blue and green based on the core value Pro Trader condition. Don't forget this diamond pattern on this daily. We show short below back to 178.15 again. So just keep that in mind. The most awesome and best oscillator and indicator in the world, CIS GG Pro Metrics. It is the same as CIS Intrinsic for capital cycles with Thinkorswim Toolkit. CIS Intrinsic uses the Pro Metrics for capital cycles and is a candlestick signal system. All right. This particular setup is just the oscillator for Prometrics with the TradingView Toolkit. And you can see where we're at there. We've had a peak high, a very bullish trade, and it is bullish, but we do show some short pressure in it this week. So what we want to watch is price performance around this compression level. If we can't get 137 pips high, we're coming back down. All right, so keep that in mind. Look at this pound out trade on this daily. What I'm going to do very quickly is I'm going to flip on my indicators, all right, and I'm going to show you on this daily chart our TradingView Toolkit Prometrics algorithm. All right, we are trading at the algorithm level, which is 182 range at this 182.06. And you're looking at our signals. We're showing some selling back down below this 180 area, and then a bounce and a move higher. So that's what we're looking at there on that daily. And as an extra bonus, since I ran this video long, I want to give you something at the very end that's really worthwhile. I'm going to show you what the strategy for TradingView Toolkit CIS GG Pro Metrics actually produces. If you'll give me just 1 second. I need to get it to activate. I'm going to pull it up. I'm going to tell you what this has done over the last 267 closed trades. All right? 267 trades. $408,555. 250 plus trades on the Great British Pound Australian Dollar. TradingView Toolkit from Joshua Corum at CIS Trading with FX Insights has pulled a 400% return in 250 trades at a value on one lot. Just $100,000 full lot, $408,000. The average trade is for 4 candles. That's pro trading, 4 candle trading. And the average trade result was $1,500. That's CIS Trading. TradingView Toolkit. I'm JC with FX Insights. Let's pro trade, folks.